Thinking about saving for retirement in your 20s? Not a lot of people are. But as Steve Beaudenay shows us in tonight's 9 p.m. Extra, younger workers might want to take notice, especially after a lot of baby boomers are finding out that retirement does not start at 65 anymore.
The recession, housing crisis, and lack of savings has some baby boomers postponing retirement, and now they find themselves still working into their 60s and 70s.
They were kind of on the cusp. When they started in the workforce, it was more of a pension, company pension strategy. And then it moved to a self-directed 401k type of investment plan. I don't think that they fully embraced that concept, which made them not put as much as they could.
Adrian Larson is the president of Pathlight Investors. He says this type of scenario might help convince younger people to start investing sooner.
They have to be the masters of their own retirement. We can't, at this point, rely on Social Security, on a company pension plan, on, go down the list, Medicare. We don't, any of these entitlement programs.
Larson says one way to start, put money into a 401k.
There's a statistic out there, 50% of workers age 18 to 30 don't participate in their company's 401k plan. Put money in your 401k plan. You need to have money that's going to be able to grow.
His client, 29-year-old Kurt Kremer, is already ahead of the pack in his age group.
You know, as soon as I got out of college, I started putting money away into a 401k, and then had a company who didn't match it but put a certain percentage of our income in each year based on how good of a year they had.
While Kremer is looking for Pathlight Investors to help him continue to grow his 401k, there are other investment options to consider.
Starting out, you can do things like your online brokerage accounts, like your E-Trades, your TD Ameritrades. If you're wanting to just get into something simple, buy a few mutual funds.
Now, for those who say they don't feel like they have enough money to put away due to the current economy, Larson says open up a savings account.
There are a couple of stats. If you start at age 20 saving $200 a month until you're 65, and if you get a standard multiple or a market return of 8% a year, you'll end up with $970,000 at the end of time.
So whether you invest in a 401k, savings account, or other options, when it comes to your retirement, no matter what age, it's never too late.
It's obviously better to start early, but at the end of the day, you need to be able to put money away at any point in your life to make sure that you're able to live the same lifestyle that you want in retirement.
Steve Beaudenay, 3TV.
Well, tomorrow, Pathlight Investors will be hosting a free Outlook conference to provide investment, economic, and financial planning information. For all the details, log on to azfamily.com.